Okay, welcome. We have another property here, and this one is in London, Ontario, on 7 MACKAY Avenue. Salesperson Diane P Gordon. So you can reach out to her if this is something that you want to pursue. Okay, so let's underwrite this deal. Let's have a look at quickly at the pictures. It's 4999 and Opportunity Knox. The duplex, minutes from Wortley Village. The location features main floor with 2 bedrooms, 2 baths, and in-suite laundry. Okay. Upper features a renovated 1 bedroom with neutral decor, laminate floorings, maintaining currently owners and updates. Many updates. Large lot with lots of parking, garage, fully fenced, upper unit deck, excellent income, making up. Now it says here, main floor rented month to month and the tenancy is 956 plus hydro as of January 1st of this year. So the upper is vacant, but the projection rent is 1,250 plus hydro. Okay, so let's look at this deal. So first thing we're gonna do is obviously we're gonna copy this address because we always want to copy an address. So what I'm going to do is I'm just going to make a copy of this. So always make a copy, okay? And make a copy of the file, all right? And usually what I do is I just copy the address, okay? I'll just put the units. This is a duplex, all right? Duplex, and this is London. So I usually like to say start off with how many units, where is the property, location, and then what I do is I just create a spreadsheet. All right. And we just save it in the spreadsheet, okay? And save a copy of that. So that way we always can reference it back, right? I mean, we can work off of the main file, but what happens if something happens to that file, right? I mean, you want to make sure that, you're able to analyze multiple deals or as many as you want without damaging the master file that you guys are going to download, okay? All right. So let's do that. Okay, so we're going to copy this address. What you can do, I'm going to copy it, but what I'm going to do first, sorry, it's taking a little bit longer than normal. Okay, put the address in there. I like to copy and paste the image, okay? This is just something that I like to do. You don't have to do this, okay? But I'm going to do that. That way I always have a reference because sometimes you forget what it looks like, especially when you analyze so many deals, right? Let's just have a look at it. So it's a cute little house, nice porch. Looks like it's well maintained. Hardwood flooring. It's actually quite nice, okay, for investment property. The shed in the back, big backyard, and a deck for I guess I imagine for the person on the top unit to be able to use. Okay, so that's good enough. So what I do is just gonna take this picture. I'm gonna just gonna insert a picture into that cell. You can't copy and paste. You have to insert it. So I saved it to my desktop. I'm just gonna find the file and just gonna place it in there. Okay, it shouldn't take more than a couple seconds here, and then we're done. Okay, so now we have the address in there, we have the picture, so we know exactly what property we're talking about. Okay, 4999. So what we're gonna do is we're gonna put the price in 499,900, 499,000, 20% down with interest rate of 5%. Okay, so now just to recap, so 20% down. If we do 20% now, we can go up to 30 years amortization. If we do anything less, if we do like 15%, which is called a high ratio mortgage in Canada, your maximum is going to be 25, which obviously is going to increase your monthly mortgage payment. Okay, so that's why we always say, okay, trying to get 20% down. That way, first of all you eliminate CMHC fees, and you can go 30 years, which you're gonna prolong the amortization, which is also ultimately going to result in reducing your monthly mortgage payment. Okay, so we are in London. So London, the market cap in London, we're going to put in 2 for the units. Market cap in London is around 5%. Okay. So again, this information, this market cap, you can gather all the information from the document that you'll get on file when you purchase the software. Okay, so we're gonna now we're gonna add the rents. All right. So what we're gonna do is it does say here that they do have a person coming in January 1st, 2023, and they're paying $956. But I want to check something here. So this is the main floor is 2 bedrooms, and the upper floor is 1 bedroom. So it looks like the main floor rented month to month. This sounds really low, 99995. Hold on a sec. The upper unit, hold on a sec. 2 bedrooms, 2 baths. The main floor. Okay, so the main floor is rented for $995, but the upper unit is getting more money. Well, how does the upper unit get more money? Because the main floor has 2 bedrooms and the upper has a 1 bedroom. So why is it more money? There's something wrong there, month to month. Okay, so there's something wrong there with the income. All right, so let's just look here. We're gonna look at 2 and a 1 bedroom. So we're gonna go to internet and we're gonna search for average rent in London, Ontario. Just hit that and enter, and Zoomer usually comes up. Okay, so you're gonna just grab here roughly the on a 1 bedroom is 1/6. So we're gonna put 1 bedroom because we have 1 bedroom over here on the left hand side, and we have 1 2 bedroom, right? So the 1 bedroom is bringing in 1691, and the 2 bedroom, which is crazy, I don't get that, is 2153. Okay, so that's kind of the roughly the rent is basically, this is the amount of rent that they're acquiring per year, per month rather, and this is the amount per year with a vacancy of 5%. Okay, so we're going to leave that as that. And right now, so are we in cash flow? Yes, we are. We're 2,000 a year in cash flow. Okay, not nothing great, but we've actually put in 30% as taxes. See. So I have 35% as taxes. That might be high, I think, for a property of this size. It's only 2 units. You're probably looking at expenses of 20%, not even 25%. Okay, so we did increase the cash flow. Um, so I don't know where they're getting these numbers from. So the main floor rented month to month tenancy is 956 plus hydro. So okay, so tenants are paying hydro on both situations. But why is the 2 main floor? So 2 bedrooms on main floor. So 2 bedrooms is getting less money than the 1 bedroom? Something just doesn't sound right there. So we are going to go by these numbers here, okay? This 1 bedroom is 1/6. And their 1 bedroom is actually 1.250 plus hydro. So I would go with the 2 bedroom as 2,153 based off of what the average rent in London, Ontario. So this particular property is way below average. Okay. So let's move on. Okay, so we put in 20% for expenses total. Again, these are the taxes and insurance based off of this number. So, so what we're gonna do is this: we're gonna leave that at 20% for now, and this is what you're looking at in terms of NOI and so forth. So, according to this, this is what the property is essentially worth. What you should be paying based off, because it's an income-producing property. Okay, it's not your personal residence; it's an income-producing property, and that value is based on the income, the NOI, divided by your cap rate. Okay. So right now it looks at 645,792, and they want 499. So it's well below what they're asking for, okay, based off of income. Okay. So far so good, right? So far we're in a good situation. Okay. So in this case, we're gonna base this as this is the rent, because these numbers are, again, it's month to month, so you don't have to necessarily keep that tenant in there. There's no they haven't signed a lease, right? So we're gonna put in here as a 2023 in Canada, you can raise your rents about 2.5%. So we are gonna We're going to project that out. Sorry. We're going to project that out as 2.5%. Okay. So it's 2.5%. And that's added to it. Laundry, it looks like they said there's laundry on the main floor. You're not going to charge for laundry. Parking, you're not going to charge for parking. It's a duplex, right? Pet fees, there's 2 units. You may have a pet in there. I'm going to say no. Okay. Tenants pay utilities. Yes. That's why there's nothing up here. You don't see anything up here. But we are accounting for 20% overall expenses. Maybe we were paying for lawn and snow. We were paying for the water. Maybe we're paying for repairs, things like that. Insurance, taxes. That's some of the costs associated with the 20%, and we have a maintenance fee of 5%. Okay. Again, we're not going to manage it. It's in London. If you're close or situated around that area, or even not too far, I'm located in the Toronto area, so we're about an hour, maybe 2 hours out, something like that. So this is something that we can potentially manage, right? So we're not going to have management fees on this. We just don't have enough income to absorb those costs. All right. So energy efficient lighting, it's not going to make much of a difference. Lower interest rates, 5%. It's already low, right? I mean, at this stage right now, I don't think we can. But can we increase the down payment? Yes, we can. So let's say we put in 30%. There we go. So we put in 150,000 on this property, and we could potential cash flow 10,000. So guys, keep in mind, if you already have your own house and you have equity available, you may be able to pull out that equity. It might be able to help you pull out that equity out of your house, 150,000, and you put it into this investment property or any investment property for that matter. Okay. So self-maintenance, we are going to self-maintenance. Okay. So we're going to say yes. So we're going to self-maintenance. So we just save 5%. We just increased our cash flow to 13,000 a year. All right. How about rent guarantee program? Absolutely. I recommend this for everybody purchasing a property in Canada. Okay. And let's see here. So, but we're going to put yes. So we're going to hit the drop down yes. And you're going to look over here. It added the 5.5% to it, the expenses, and also added the monthly fee. But we're going to need to eliminate this vacancy because rent is guaranteed now, right? So we don't have to worry about a vacancy charge. So if you look on cash flow, it's at 10.4. Let's see what happens when we hit enter. There you go. It jumped to 12,000. Okay. So you're roughly about $1,000 a month in cash flow after debt service. And after 5 years, this is the profit and cash flow that you'll have based off of based off of this criteria that we have on this rents. And after 5 years, the 80% of the value of the property, obviously the property will appreciate in value, and you'll be able to extract potentially 80% of the full amount of value of the property, minus obviously the mortgage that you already have on it. Okay. And so that's essentially it. So now it's valued at 704, and we're buying it at 500,000. Okay. So this is something. It's a pretty good deal. But let's just do something here. I'm going to put in their rents for a sec. I want to see what happens. Okay. So that one bedroom, we're going to put in 956. So let me just take a quick screenshot of this so we don't forget what the pricing was. There we go. And then what it is, I'm going to put in this number. I just want to see what kind of cash flow we have based off of whatever we're seeing or whatever they're acquiring right now. Okay. So we're going to put in 1250 as as the upper bedroom. Sorry, my mistake. This is 1250, which is crazy, and the 2 bedroom is making less. That doesn't make any sense. So 956. So we're in a negative, as you can see. Okay. We got 20%, 25.5% on with the rent guarantee in terms of expenses per year. I think that's really low in terms of expenses because we've got 27,000 and only have 6,000 in expenses. So we're actually pretty low. So these rents do not make sense with this property, obviously, right? So again, this is going to something you need to do. Maybe you're going to call Diane and ask her why, what is the real market rents there, or you can potentially get an appraiser to go out and get you an idea of what the market rents could be. And I'm pretty sure it's going to be more than this. So So this is, yeah, this is a good deal. Not on these numbers, okay, but based off of the numbers we had before. All right. So on the one bedroom we had 1691, and two on the two bedroom we had 2153. Oh, mistake. 153. Okay. There we go. Now that's better, right? So, so this is essentially a pretty good deal. This is something that you can look into. It's really inexpensive. It's a nice looking property. Looks like it's been well maintained. And this is what the cash flow is per year, per month, cash on cash return, and you have a deal cap that's higher, obviously, than the market cap. Even you see, even if the market cap was 6% or even lower, you're obviously in a better position. Okay, 2 units, cost per door is actually really high, but in this case, the price is relatively low. Would you do a better take back? Probably not. You're already getting a great deal. You could potentially go in lower. Let's say we can go in maybe for 475. Let's just see. So that was finally one of the that last situations, reduced price offer on the maximizer right here. Let me just click it, make sure we did it, and then we're going to put in 475. So it didn't make much of a difference, right? So we're at 13,000. Let me just see here. Let's open it up a little bit. We're at 13,930, right? So what did this would do was 4,999, right? So we're at 12,008. If we bring it down to 475, hypothetical, we're about another thousand. So every year, 1,000 and a bit. Okay. Either way, it's a good deal. I mean, you can go in with this offer at a 475, and maybe that's something that they will take. So reach out to Diane. I think this is a good deal. Diane P Gordon. She's a salesperson. You can reach her at 519-679 and sorry, 679, looks like 1090. All right. I don't have her email address, but I will be posting in the links below. I'll be posting the address, and I'll be posting her information so you can reach out to her there. Okay. And that's it. So this is another pretty good deal in London, Ontario. Solid investment, it seems like it, if we can secure these market rents. Again, that's something that you have to do your due diligence on and investigate a little bit further. But this is potentially a nice little deal. Okay. Thanks, and until next time.